Okay, let's unpack this. Welcome to the deep dive. Today we're jumping into Bitcoin. It often seems really complex, maybe even a bit intimidating if you're curious about crypto but not sure where to start. Right now, Bitcoin, or BTC, is trading around, let's see, $103,760. It swung between about 106K high and 102K low. But the numbers just scratch the surface, right?
Absolutely. What's really fascinating isn't just the price swings, but how Bitcoin handled some, well, serious turbulence recently. Around mid-June 2025, our mission today, to connect that recent behavior, its resilience and its volatility, to what it means for you, the everyday investor, helping you understand its sort of a hybrid nature.
Yeah, that resilience part is key, because even with all the, the geopolitical noise, big players were still pouring money in, which feels significant.
It really is. Think about the U.S. spot Bitcoin ETFs. They saw, get this, 8 straight days of inflows. That's money coming in.
8 days straight.
Yeah, and on June 18th alone, it was around $388 million. Big funds like BlackRock's IBIT were leading the charge.
So these huge established players are buying in consistently. What does that tell us? Is it becoming less risky?
It definitely signals growing institutional confidence, yeah. It suggests a stronger fundamental base beyond just speculation. BlackRock's fund holding over 3% of all Bitcoin. That's major validation.
3%, okay. And it wasn't just ETFs, right? Corporations were buying too.
Exactly. MicroStrategy, Michael Saylor's company, they added another 10,000 Bitcoin, about $1 billion worth mid-June. And you're seeing newer players, too, like Trump Media filing for crypto ETFs, building treasuries. It suggests wider corporate interest is growing.
Okay, so institutional money, corporate money. What about the bigger picture, like the economy?
That helped, too. Expectations of Fed rate cuts, maybe slowing inflation. That usually makes assets like Bitcoin look more attractive. Plus some positive signals on the policy front.
So a lot of positive signs. Strong demand, big buyers, helpful macro trends makes it sound almost bulletproof.
Almost. But then, geopolitics enters the chat.
Right. And that's where we saw the other side. Between June 12th and 14th, escalating Israel-Iran tensions hit the price hard.
It did. And it really forces that collision. Is Bitcoin digital gold a safe haven?
What did we see happen?
Well, in that specific moment, it acted much more like a risk asset, not a safe haven.
How so? What was the price reaction?
It was fast. Bitcoin dipped below 104K. Then after reports of Israeli strikes, it dropped maybe 2-4% pretty quickly. Fell from around 108K down near 103K, broke that 105K level.
And where did investors put their money then?
Classic flight to safety. Money went into gold, which hit a 5-week high, and the U.S. dollar strengthened. Traditional safe havens.
So Bitcoin didn't perform like gold during that crisis moment?
No, not in the short term. It showed it's still vulnerable to those big geopolitical shocks, reacting sharply downwards. It highlights this dual nature.
Okay, so wrapping this up.
Yeah.
What does this mean for you, the listener, trying to make sense of Bitcoin? We've seen it get knocked by global events, but also show real strength from big institutions buying in.
Exactly. The key takeaway is understanding this hybrid profile. It's volatile in the short term, yes, reacting to headlines, but it also has this growing, strong foundation of institutional support. So, short term, expect that volatility, maybe around 103K, 104K, especially if geopolitical news keeps breaking. Risk management is super important.
And looking out a bit further, medium term.
Keep watching those ETF flows. Continued inflows show that institutional confidence is holding up. And watch key support levels, like 103K. Does it hold?
And the really big picture, long term.
Well, analysts are still talking about high targets, $200K even. Based on wider adoption, macro trends, that institutional embrace is a huge part of that story. But even with that long-term potential, managing the short-term bumps, the volatility is essential. It's definitely not a set it and forget it kind of asset yet.
So here's a final thought. Given Bitcoin's ability to bounce back, combined with this deep institutional buy-in, are we seeing an asset truly maturing into something foundational? Or is it still just a fascinating, maybe unpredictable digital wildcard, something to think about?